Good morning, everyone. How are we doing today? I look forward to doing these daily financial news videos with you. Um, I think it's fun. Gives me some purpose in the morning, lets me enjoy some cup of coffee and have a good day. Today we're starting off a little later than normal as I just finished an interview with Color Media about marketing, where we talked about creating daily content on YouTube, but also talked about my office building, kind of the internet world, social stuff, and then a physical location conversation. So that was kind of interesting. I think that'll be out in the next couple of weeks. But on that topic, if you have connections with any people that run podcasts or radio shows or anybody that's looking to interview guests about real estate, investing, or financial freedom, do me a favor, make an introduction. I would love to talk to more people and spread the word of one rental at a time and what we are doing together on this channel. So let me know. Make some introductions. Let's have some fun in 2020. Next, first off, I don't know if you saw it yesterday, but yesterday around 11 or 12, I think, I put out a second daily video. This one specifically about some, I don't know how to say it, disgusting behavior at a JP Morgan bank in Arizona. And I was a little disturbed that this article had been around. It was first reported by the New York Times that Jamie Dimon hasn't come out and responded yet. And thankfully, he did. At least I saw it today. It may have gone out yesterday. But he basically responded, as you would expect him to. Not acceptable, all of that stuff. At least he's responding. And I think all of us will watch with interest to see if we can't root out this behavior. To be clear, I don't think this behavior is unique to JP Morgan. I think unfortunately it still exists in too many aspects of our daily lives, and we all need to do a better job. And if you want to see what I'm talking about, check out that video. YouTube does not like me saying those kind of words. It kind of drops the whatever it's called algorithm thingy. So watch that video. I meant everything I said in that. It was terrible behavior. On to more interesting topics. Have you heard of this strategy called Dogs of the Dow? This is a strategy that I first heard like 15 or 20 years ago, where basically on January 1st, you would buy the 10 highest yielding Dow stocks, hence the worst, basically lowest stock price, highest yield or dividend, and you would just hold for the whole year. And that strategy had worked for years. Unfortunately, this last year, the dogs of the Dow, again, highest dividend stocks purchased on January 1st, 2019, did not work, and did not work spectacularly. The S&P, if you don't know, is up roughly 26% this year. The dogs of the Dow, only one of the 10 stocks is up close to that, all the others below. So that was a losing strategy. Again, it's kind of one of those things that's like a statistical anomaly, you would think. But again, dogs of the Dow go the whole cheap route and see what happens. So again, it's a strategy where you buy the 10 highest yielding dividend stocks in the Dow, right? Hence called Dogs of the Dow, and it did not work. Next up, it's interesting on two fronts. There's this growing trend around socially responsible investing. I read that and I'm like, I don't really know what that is. But reading the article, it's a $30 trillion industry where basically you are making decisions as an investor not only about profit and growth and all of those things, but it's also called impact investing. And I'm just curious, when you are making your, I guess, stock picks, mutual fund picks, whatever you decide to invest in, do you evaluate impact investing, right? Do you look at the social aspects, or do you simply say, hey, I want the fastest grower with the most profit? Right. I'm curious. When I was picking stocks, which was probably 20, 25 years ago, I never even thought about impact investing. It wasn't taught in school. I have an MBA, and we never talked about impact investing. So it's interesting to see how it kind of evolves over time. So I'm curious, anybody out there, when you are evaluating stocks or looking to buy a company, um, look at the impact side. So I'm just curious. Leave a comment below. Let me know. What do you look at? Because I don't even know what I would look at. But let me know what you think. Next up, did you know that in 2019, space investing has become a thing? I, I had no idea. But yes, there are companies that are out there, and you can start investing in with the intention of being under the umbrella of space investing. This feels so sci-fi to me. Um, but again, Morgan Stanley has put on their second annual investing seminar around the whole concept of space investing, and this only in their second year they grew out of space. So they're going to have to get bigger locations and all of that. So pretty interesting stuff. Um, Again, talk about being a first move. Isn't like the first mover here lose money and go out of business? And I don't know, but it's interesting to think. Would you invest in owning part of the moon? Or I'm not even sure how they would do this. I guess it's probably transportation. Maybe it's building hotels in space. I don't know. It's not someplace I have any knowledge or depth in, but it certainly caught my attention. This space investing thing feels very George Jetsons to me. And then next up, you got to close with the trade war. As we talked about way back on Monday, I thought the compelling event of a Sunday tariff increase would make a compelling event, and it certainly did. We were right again. Again, we were right that there would be an agreement, but they wouldn't have time to get a date to sign because that want all the press and formalities and too busy leaders. I'm sure it takes time to get together. So it looks like agreement. Both sides they're saying there's an agreement. The depth and what are in it is not. They are talking about the tariffs on Sunday don't go into effect, rolling back and intermittently over time, intellectual property, technology rights. Again, I think this is going to be, buy the rumor, sell the news, because I'm guessing once the real meat of this phase one gets out there, we're going to be disappointed. I think people have higher expectations. But the good news is, I don't think we're going to see it till January. I think they're going to keep it under wraps until January. I think they want to have this market melt up into the end of the year. We've got 2 weeks left. We've got Christmas holiday and New Year's in there. The trading days are not very many. So my guess is they're going to extend this out to January. That's when we'll figure out what's really in it. Well, we'll be either satisfied or not. But then we get to talk about how do we get past phase one onto the meatier topics, which I'm sure are more negotiations. I still think something gets done next year. I think both sides want to see something get done. I think all of this leads to, again, 2020 being a good year. I think we can take the trade war out of the headlines for 6 months. The Fed policy is good. Unemployment, we had a bang up number 2 weeks ago. So things are feeling generally good. So that's what I got for you. I'm really proud of Jamie Dimon coming out and saying something. I don't know if there's really any action there, but he had to do something. That was a terrible article reported by the New York Times. So good on New York Times for putting it out there and calling attention to a blight on our society. Again, the trade war is done, or at least phase one is signed, or not. Sorry, agreed to, not yet signed. So we got to watch that. And what I'm looking down at are all my notes. So I'm not ignoring you. So that's what I got for you today. Have a wonderful day, and we will talk to you tomorrow on the Daily Financial News. Thanks. Bye.